Today, another electric vehicle startup says it plans to go public, but Tesla investors aren't worried. That stock continues to race full speed ahead. Plus, Home Depot's second quarter sales surge on the strength of the new DIY economy. And finally, forget the flight to the suburbs. Amazon is betting on the future of cities by adding thousands of new jobs in big urban centers. I'm MacKenzie Sigalos, and this is CNBC After Hours. Let's start with a look at Wall Street's day. It's a record close for the S&P 500, and it's the first time since February 19th that we've been able to say that. The index has risen about 55% since the depths of the March lows in the middle of the stock market's coronavirus plunge. Now, we'll say that again. In less than 5 months, the stock market's best indicator gained more than 50%. And speaking of gains, that brings us to Tesla. Now, it's not news that Tesla stock is rising. It's been rising for months, but it's rising so much, so fast. Tesla is up more than 14% so far this week, and as a reminder, it's only Tuesday. Since the beginning of the month, shares have jumped about 32%, and today is only the 12th trading day of August. The numbers keep going up from there. In the current quarter, 75% higher and counting. And in the past 6 months, 120%. 2020, 350%. And in the past 12 months, Tesla stock has gained about 760%. I mean, it seems nuts, especially when you remember that competition is coming from all sides. The standard bearers of the auto industry like Ford and GM are building and releasing flashy new electric cars. And disruptor hopefuls like Nikola, Fisker, and Canoo, which just announced today that it will go public, well, they're coming for Tesla's customers too. But CNBC's Phil LeBeau explains why a lot of investors don't think the price action is crazy. In fact, they think it's set to keep running higher.
Three things are driving shares of Tesla higher. First of all, many investors are saying, look, it's likely to be included in the S&P 500 sometime in the next couple of months. That will drive more fund managers to buy the stock. At the same time, Tesla shares will go through a 5-for-1 split at the end of this month. So people who hold this stock at the end of this week will participate in that. That will bring the average price for a Tesla share down to somewhere in the $350 to $400 range. And the belief is at a lower price point, more retail investors will then buy the stock and push it higher. The second thing driving this stock higher, the performance of the company. It posted a profit again in the second quarter. It is doing well in China. Sales are strong. So people are looking at Tesla and saying, these guys dominate the electric vehicle market right now. When you say electric vehicles, you think Tesla. You don't think of other automakers. They have become the Kleenex of the electric vehicle market, and that's expected to continue growing. And the third factor, Elon Musk. People are looking at him and saying, he's had success at SpaceX. He's had success at Tesla. I like what he's doing. He may be controversial, but I want a piece of that. Well, there's no shortage of people who are saying, you got to buy Tesla. You got to get in now. There's an equal number of people who are looking at shares of Tesla and the fact that they're up 25 or 30% in a week or a month, and they're saying, this is nuts. And the reason they believe it's nuts is because it's hard to put a valuation, an accurate valuation, on Tesla's future profits. People look at Tesla and they say, yes, it's growing, but they're only going to sell maybe 500,000 vehicles this year. Compare that with General Motors or with Ford, who are selling 10 times as many vehicles as Tesla. The difference between Tesla and established automakers, it's the growth potential. Tesla is growing quickly, especially in China, and its global market is expected to continue to expand. And people look at that and they say, yeah, it's a rich stock, may not have a valuation that makes sense, but I want a piece of that.
Okay, let's get to our sound check. Here's a roundup of the day's biggest action and what the top newsmakers and business leaders had to say on CNBC's airwaves.
The good news is, despite Congress not acting because Pelosi and Schumer aren't willing to sit down and strike a reasonable deal, the president moved forward with the EO to help people who are still unemployed.
Normally about 3/4 of the people who vote in our state use drop boxes, which are all over. They're at grocery stores, they're next to mailboxes. About 1/4 use the mail. I think that 1/4 is going to be a little bit lower this year. People are going to trust the official drop boxes more.
What I would like to do is see critical industries like semiconductors, like basic drugs, be made at least to some degree in the United States, so we have resiliency built into our system, so we don't see the kind of threat that we faced in March and April when China had the market cornered on certain critical goods. I think that is vitally important for the American people.
What we see is that we're really just beginning here. It's the top of the first inning for this revolution. It's a SPAC revolution.
Even all electric vehicles look like combustion engine powered vehicles. They have an engine compartment, a passenger compartment, and a luggage compartment. Our vehicle, really our design, takes full advantage of an electric powertrain, and this is why we could free up that huge interior space and make the interior more relaxing.
Last year, we saw about 5 passengers per million passengers that carried a weapon. Now we're seeing about 15, so that's 3 times the rate that we saw in the past. The really concerning part of all this is that about 80% and sometimes higher of the weapons that we do detect in the checkpoint are also loaded.
All right, so we talk a lot about how big tech is the winner of the coronavirus economy, and that's certainly true, but they're not the only ones. Big box retailers, aka those chains with huge physical stores, are hitting all-time highs. Best Buy, Lowe's, Walmart, and Home Depot all hit record highs today. And they're all up double digits in 2020, while the S&P is largely flat. Walmart reported its Q2 earnings this morning. Their sales crushed estimates, and the e-commerce growth was eye-popping. That jumped 97% as people opt to shop from the safety of their homes. Home Depot released earnings as well and also posted strong profits as consumers stuck inside with time to kill take up DIY projects. CNBC's Holland has the details on Home Depot's blowout quarter.
Well, Home Depot really had a blowout Q2. Its sales grew by 23%, its profits grew by 25%. Another key part of its Q2 was its online sales. Those doubled, increasing by about 100%. The company also said it wants to continue its store as a hub model, and as part of the online sales increasing 100%, 60% of those online buyers, they actually picked up there at the store. The company says it wants to continue using that to make its store a place where people come to not only pick up things they buy online, but also to get advice and also possibly make purchases in other departments of a Home Depot. Well, Home Depot executives basically said that people are either discovering or rediscovering their homes. They said they're pro-business, contractors, plumbers, people like that, people who will professionally make home improvements. That's really their core business. That was down a little bit just because of a difficult permitting and licensing environment. But it's do-it-yourselfers, people like you and I fixing up our houses. They say that more than offset the declines in pros. So really the key for Home Depot, they said, was that the gains in sales and things like that, they were spread all across the company and all across stores in different departments. They said there wasn't one department that especially stood out. For example, a lot of people feel like gardens are being especially tended to during the pandemic because people are looking for outdoor space. Well, the company said it's comparable store sales. The sales in stores year over year, well, they would have been just about the same had you removed gardening out of the equation. Home Depot executives, they were pretty hesitant to do any forecasting. In fact, the company did not give any guidance for the rest of the year or even for Q3. But one thing they did say that was pretty interesting, that they expect that the environment for their pro business, which are contractors, plumbers, etc., they expect that environment to become increasingly favorable into Q3 and possibly into Q4 as permitting and licensing becomes easier and people just start to feel more comfortable having outsiders inside of their homes. Home Depot executives, they were pretty hesitant to speak about the impact of potential federal stimulus on their business. And again, they did not provide any guidance for Q3 or Q4, but they did mention that sales started to pick up at the end of Q1 and they really accelerated throughout Q2. That timeline, it generally syncs up with the federal stimulus checks that were sent out to many Americans. Of course, if people have more money in their pocket, they do tend to spend it out in the economy, and there's no question that people have been spending more on home improvement.
Okay, time for today's numbers round. We'll kick it off with 3,500. Amazon is adding 3,500 corporate jobs in 6 major American cities as the tech giant makes a big bet on the future of working in offices, while the other companies plan for permanent remote work. Amazon is adding to its workforce in New York, Detroit, Phoenix, Denver, Dallas, and San Diego. Next, $168 billion. That's the market cap of enterprise software company Oracle. $168 billion. And sources tell CNBC that Oracle is the latest suitor for Chinese video app TikTok. Now, remember, the Trump administration has vowed to ban TikTok in the U.S. if its Chinese parent company doesn't spin off the app into a separate entity. Microsoft is already in talks to purchase TikTok operations in 4 countries: the U.S., Canada, New Zealand, and Australia. But sources say the discussions with Oracle have accelerated in recent days. One other detail here: Larry Ellison, the co-founder and executive chairman of Oracle, is a supporter of President Trump and has hosted a fundraising event for the campaign. And finally, $562 million. Warren Buffett is betting big on gold. According to new SEC filings, his company, Berkshire Hathaway, put $562 million into Barrick Gold, which is a gold mining company. Now, gold has been red hot this year, up around 30% so far compared to the S&P 500, which is only up about 5%. That's it for After Hours, but before we go, here's one more thing to keep an eye on. The Democratic National Convention continues tonight, virtually. Dr. Jill Biden is the headline speaker, following remarks by New York Congresswoman Alexandria Ocasio-Cortez and former President Bill Clinton. Get up-to-the-minute developments from the convention by going to CNBC.com and downloading the CNBC app. We'll be right here in our home office every Tuesday, Thursday, and Friday with a new edition of After Hours, so be sure to catch us then.